Hey everybody, Tom Chantal, welcome. Happy Monday to everyone. Short trading week. Glad to have you here. Our live trade series for Monday, April 6th, 2020. Happy birthday goes out to my daughter who's 23, still living at home. I can't get her to get a job now because there's no jobs. I can't get rid of her if I wanted to. So anyway, that's enough of my stress. Glad to have you guys here. We got a really good program today. Probably going to go about an hour is my guess. So we'll probably be wrapping up around 2-ish. But in any event, we've got market update. I want to do a quick coronavirus update. We'll look at long-term stocks, bonds, currencies, commodities, cryptocurrency. We'll look at the intraday charts. I want to show you what happened over the weekend and case studies if we got them. I will share a couple of them with you. I'm really getting more and more bearish in oil, and I'll say that right off the bat. And then of course we've got our trading mantra to wrap up the hour. Jay's going to be joining us. He's going to be looking at all things darknet, money counter, and any other things that are hitting his radar. And I will I got something really cool I want to share with you. So while Jay's talking, I'm going to go dig that up. Something that we will be releasing this later on this year. I'm doing some juggling where what I mean by that is I'm juggling some of our mastery programs, and I'll tell you a little bit more about it, but I want to show you guys something that's going to be coming out before summer. All right. And so when I say before summer, we're going to have this out. I think we will have it out in June for sure. But I'll share that with you. I'm going to hold that as a secret until later on the program. Hey, we got this lovely disclaimer here that you can read word by word. All you have to do is take the recorded content that's going to be sent to you later today and just pause it right here, and you can read this. I want to mention two quick things on this, as I do in every webinar that we do. First of all, stock and options have large potential rewards, but also large potential risk. Second thing I want to mention is myself, Jay, everyone associated with Tom's Trading Room and Tom'sOptionTools.com. We are here as educators, show you how it is we trade the markets. We're not investment advisors. We're not brokers. We don't give specific individualized trading advice. And everything I'm going to talk about is in US dollars unless noted otherwise. So we'll do a market update. We use Tom'sOptionTools.com. We'll talk risk on, risk off. Coronavirus update. I'm going to put that in there. I might pepper that in before we get going. And just so much more we want to do. We've got some case studies I want to share with you, and just money clock. We'll get into that and see if there's anything happening with it as well. Let's start off first with what happened at the end of last week. These are closing numbers last week, and they're going to year to date, not from February's highs. So before the markets opened this morning, we were still down 26% on the Dow, 17% on the NASDAQ, and almost 23% on the S&P 500. That was before today's moves. Now, today's moves, you can shave about 5% off of each one of these right now, and maybe more or less by the time the markets close in 3 hours. But what we were noticing is 26.26 was Monday. We dropped to 25.84, 24.70, 25.26, 24.88. We were bouncing around those high 24s, right? Now hold on to that, because over the weekend, here's your coronavirus update. Over the weekend, we had kind of some good news, bad news. The bad news, coronavirus task force. They say the worst is yet to come in the coronavirus deaths, and the next 2 weeks are very critical. Also, you can add bad news to businesses starting to file for that Paycheck Protection Act. And the bad news is it's kind of muddled in problems. If you take a look at it, first, it's confusing on what you can use the money for and what you can't. Second is, if you have a relationship with a bank already, which most businesses should, honestly, then it shouldn't be any problem filing, at least getting the process started. But because banks are so backed up with businesses, millions of them hitting them at once, pleading for money, the best answer they're getting back right now in most cases, unless you know somebody, is thank you for submitting your forms. We'll get back to you with any questions, and make sure you have X, Y, and Z ready to send us when we ask. And I'm talking about 1099s, payroll reports, etc. That's what, that's what businesses are waiting on. My brother-in-law has several businesses, and every single one of them has seen almost a total wipeout. I'll give you an idea. What is the worst business you could possibly be in? And it was the best business for him, but it became the worst. What he did was he provided scanning equipment and on-site service and support to conferences, trade shows. A lot of his business was done in Las Vegas and Orlando, because that's where, that's the conference and trade show capitals of the country. Vegas, Orlando, New York. And all that got shut down in February, and his business went to zero. So he's filing for the Paycheck Protection Act. He also has a manufacturing business, which he is retooling, and he is creating face masks. The difference between his face mask and everybody else is he thought about it a couple weeks ago and decided he was going to make reusable face masks. So they're going to be made out of a high-grade plastic, and you're going to be able to clip on and twist on an N95 filter. And then you pop the filter off and you replace it with another filter. That way you have a mask that'll mold to your face. I mean, it's brilliant. The guy's a brilliant guy. I mean, he's my brother-in-law. He's not my brother. I mean, he's a brilliant guy. But the thing is that, he's trying to move. He's trying to adjust with this situation. But in any case, he's filling out these Paycheck Protection Act, and he's heard nothing. And of course, it just started on Friday, but he doesn't expect to hear anything for weeks. So, and in fact, there's a part in there that says it could take up to 60 days. I was reading this. It could take up to 60 days before you're approved or denied. Unbelievable. 60 days. Most businesses are going to be out of business in 60 days. 60 days. Unbelievable. So anyway, here's what happened over the weekend. We saw some stabilization. Let me back up here a second. Stock market moved higher last night as numbers are stabilizing. Andrew Cuomo started talking, and he gave a little bit of light at the end of the tunnel, and the markets jumped on that news. And this is where we opened up at with SPY, and we trended down Friday, pop open on Monday, trended up in oil. Remember last week I was talking about oil. I don't know if I said it to all of you, but I've been talking about it all week. And when the Saudis and the Russians said they were going to get on the phone and talk about restricting the amount of oil that's being pumped, that made the oil markets jump from the fours, from about 450-ish. USO went from 450 to 6 in 2 days, and now it's back down to 550. And so the reason why it's back down, when you say you're going to do something, it doesn't mean you do it. And that's what's going on. And now people are realizing that maybe the Russians and Saudis, they're already postponing these talks. Anything with the word postpone in it can never be good. All right. So that's what's causing oil to go down. I said I was short oil. I think I said that at the beginning of the webinar, so I want to make sure that's clear. I'm short USO and I'm short oil because we have such a glutton of it out in the world. Even if we stopped pumping entirely between us, the Saudis, and the Russians, we still got a glutton of oil. We're trying to find places to put it now. So that's what's going on with the weekend. Now today, next week in April, today we've got first hour today to look at. All right, a tug of war between stocks and oil. This week we've got earnings reports that are coming out. Delta Airlines, Rite Aid, First Republic. Delta Airlines is the one I'm most interested in hearing about because that's the one. I've got a short position in Delta, and it actually is using the options that expire next week. So we get to hear how bad that might be. And this month, I still expect the market's going to react against logic. And I believe it's doing it right now. I think, if you take a look at what's going on in the markets, and let's go ahead and slide over. Here's the S&P. We'll come back to these graphs here in a few minutes, but take a look at the S&P just extending its rally. It's at 262. We opened it down here at 257, 256, and it's just huge extensions, 5.5% up on the day. Is it going to last? The bond market doesn't think so. Cash market, nah. You know what? It's pretty stable. It's down 0.8%. That's nothing. And if oil has anything to do with it, we're not going up either. So you got three charts that are diverging from what's going on. The binge buying is happening in the stock market right now. Who's going to be wrong? One chart or three? Three could be wrong, but my patterns tell me that this chart here is going to falter. The S&P is likely to falter. Let me say that, likely to falter. We'll get back to these three in a moment. Let's pop over to look at what's going on long term. And long term, I'm actually going to within our option tools, I'm going to stocks, charts, and stock charts. And what I'm doing is I actually took just to get, if you want to do exactly what I'm doing, if you go to website and go to lists, I'm going to go into edit list. In my stock market list, my stock list, all right, what I've got in here is I've got SPY, TLT, UUP, USO, gold. Then I've got Facebook, Amazon, Apple, Netflix, and Alphabet. All right. I put them all, these 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 symbols into my stock list. And I saved it. Now, the reason I did that is because if you go to stocks, charts, and stock charts, instead of starting with the stock, like the symbol SPY, you can go down the list and then update, and it'll go through every one of your list symbols using the same chart that you started with. So if we start with just a regular chart, great. If I want to do a chart with implied volatility on top of it, and I update, now all of those charts are going to show the exact same thing you see here. All right. If I want to use a chart that has channels on it, or darknet signals, or any of that, I can do that. All right. You take your stock list, or any list for that matter, and you can cycle through stock after stock. So for instance, S&P, SPY, you can see right here, SPY had that slow burn up to the mid to the end of February, and then we had the fast move down. The bull took the stairs and the bear took the elevator. And now we're having a bit of a reaction. Interestingly enough, we see implied volatility peaked before the drop ended, and now we've come back down, and we're now down more than half what had transpired just a couple weeks ago. IV went up to near 100. IV's down into the 40s right now, in the low 40s. Right now, let me show you this. Use these little arrows here. If I click the double arrows where it says list symbols once, it takes me to TLT. Chart stays the same. I'm going to back up for a moment because I want to go ahead and put the channel test on. Here's the channel test for SPY. Notice we're knocking on the door of resistance right now when you look at the channels. Right? Now, the thing I want to show you is if I update this and put TLT in, it automatically puts the channels in for TLT. This is great. It allows you to cycle through these at a much faster rate. So TLT still has upward channels, both long and short term. This is not good for the stock market, right? UUP, also in a weird uptrend. Take away the big high, take away that what I think is bad data on the low. And if you put all that in here, you still have a chart that is creating higher lows and higher highs and getting more and more stable. Again, not the best chart for the stock market. Oil, look at USO, exact opposite. Lower highs, lower lows, lower highs, lower lows. Had a bump because of the news, but that's fading. Okay, how about GLD? Let's take a look at GLD. GLD, GLD was the gold shares had a low of about 137.5. Then it snaked all the way up. It was interesting because as we were dipping down, this was the end of February, before when the markets first started falling. Gold fell, gold came back. But I was mentioning the fact that these red candles, I did not like the way gold was reacting to the market. And then all of a sudden gold got put on sale and we dropped down significantly. I mean, we dropped down a good 20% within a matter of a week. And then it came right back. And here we are today. Gold is moving higher. I still believe gold is probably one of the safest investments to put your money into, because if the US dollar continues to dilute, and it looks like we're going to be continuing to dilute the US dollar, this can only be good news for gold, for GLD, for gold coins, gold bullion, everything gold, because it's a tangible asset. There is a finite amount of it, where with the US dollar, it doesn't seem to be a finite amount of dollars anymore if we're printing them more and more every day. Paper asset versus real asset, okay? So that's stocks, bonds, currencies, commodities, and you got to get an idea of what I'm looking at. Now I'm going to I'm going to look at least one trade I'm going to be looking to put on, and it will be in GLD. That's going to be, I've already got bearish stuff in USO, but I think I'm going to go bullish on GLD and add to my bullish position. I'll show you how I do that later on in the broadcast. Before I do turn this over to Jay, however, I want to spend a few minutes looking at the intraday patterns. Intraday patterns, I use Thinkorswim. And so the intraday patterns look like this. So let's start with SPY. Now I have SPY up here. I have a 5-minute chart of SPY, and I have our I like to call them the opening hour. I call it the TTR opening hour range. Okay, the opening hour range, what we've got. And for those of you who don't have this, for those of you that are here for the first time, and you're looking at this saying, how do you get? Well, first of all, some of you that have Thinkorswim, you might be looking at these charts saying, hey, how do you get your chart to light up green on the background? Or like this, if I took USO, this is a chart that everybody sees. First thing I want to do is I want to turn off the extended hours. So come over here to equities, turn off the extended hours, and turn the volume off too. So this is USO. This is what everybody else sees. And this, if I go into style, load style, and I load up my risk on, risk off, this is what we see. Now, some of you might know what I just did, and you're going in, you might be wondering, how come I don't have risk on, risk off as an indicator? How come I don't have the opening range? Well, this is something that I just shared with the folks that join us on this broadcast. So here's what I'm going to do. For those of you that want this, so you have to have a Thinkorswim account. You don't have to have a real-time account. You can use their paper trading account. Go to thinkorswim.com for more information, but I'll give you a link as well. So in the email I send out today, along with the recording to this, I will also make sure that you get the link and instructions on how you can set this up in your own, in your own account. And so you can see here, SPY has been trending higher and has now gone in the green. That means it's above its opening hour high. The first hour of the day, it's above that first hour high. Interestingly enough, bonds are also above the first hour high, which is divergent to the S&P. Okay, the USO is on its opening range down. It's on its opening hour low, which tells me that the oil markets they don't like what's come out of this morning, and they're pushing oil to go lower. That's not good for the stock market either. Finally, let's look at the US dollar. And the US dollar, I'm seeing, again, what I got to do here, I got to turn off those extended hours. If you go into equities, you can toggle on and off extended hours, and then you can toggle on and off volume if you want to too. And then, for me, I just like to see how the overall price looks. Now, when I look at this and I see what's happened with where this is right now, I can go ahead and the same thing, and I've got this saved as a style. So I'm gonna bring my style up, and you can see here that we were below today, but we've jumped back above that. So we're in the middle. So up, S&P heading higher, bonds are contradicting, oil is contradicting, and the US dollar doesn't care one way or the other. And that's what I'm seeing right now on the screen. So any chance that I might have to go short the S&P, and for me, going short the S&P might be putting a stop right below that 260.81 high, right below that first hour high. So at least I'm chugging in the right direction, right? Now to do that, what I could do is I'm going to come over here and I go to looks like it's going to be a two. Looks like it's going to be a two trading case study day for me. SPY. Let's look at the puts on SPY and the puts that are ending today, the 6th. It's going to be the quickest trade I can put on. All right. So where's the S&P at again? Let's go take a look. 261.91. Now the options that expire today, the 261s are out of the money by $1. They're still trading for almost $1. How about the 262s? They're $1.29. I think I like these. So if I were to throw a few of these on, but here's how I got to do it. Let's say I put 10 of these on, all right? But I want to do it as a stop, all right? And I need to do this as an advanced order. So I'm going to show you how we do this. Buy to open 10 of today's 262 puts, but only, right? This is going to be a market order, by the way. You might say, Tom, I don't buy stuff at the market. No, neither do I. I need to be ready to pounce when the market does something good. And the market doing something good for me would be if we come back down below 260.81. So I'm going to set a stop at 260.80. So if we hit the stop, in fact, you know what? I can do the 261s at this because they're going to be $1 cheaper or they're going to be $1 more expensive if this thing drops $1. So if we go, again, a market order, not a stop, the stop's going to be in the advanced order. So this is going to be a contingent on price. And the price of SPY, if it decreases to 260.80, if it decreases to $260.80, all right, this is a day only order, has to happen today. In fact, you know what? I think it has to happen by 3 p.m. Let's just do it let's just do it by 3 p.m. It's got to do it by 3 p.m. It's got to decrease to 260.80. I'm going to set that trigger, and I'm going to buy 10 of those option contracts. Probably going to be going for about $2 if we get down to that area. So let's go ahead and preview that. Let's place that order. All right, that's in. That's ready to go. So what did I just do? I just placed an order on going bearish on this, but only if it crosses below that green line there. By the way, we're about $1.20. We're about 12 S&P points from that happening. I know the question is going to happen, Tom, if you think it's going to go down, why don't you just sell it now? Well, that's because I don't think it's going to go down. I don't think it's going to go up. I don't want to think at all. I want to take action if something happens, not whether or not something may or may not happen. If this thing keeps, if I sold it now and it kept going up, who's the stooge? Me. All right? Trade what you see, not what you think. All right? Jay Bird, welcome to the program.
Thank you. Glad to be here. Thanks, Tom.
You ready? Ready to start talking darknet?
I am, yeah. Let me go ahead and switch over to Tom's tools, but I'm ready to take it when you send it my way.
Yeah, let me just, I'm going to send it over to you. And while I do that, I'm going to check the boards, see what kind of comments we got going on. And then I'll shut up and I'll let you talk. So how did I add the channels? You go down at the bottom. Jay, you kind of got this all set up here. See where it's, if you scroll down a little bit, as Jay's going to do, there's an area that says channel test. You just click right there. It automatically sets the number of days back for you, and it automatically throws those channels in place. All right.
There you go.
Gold dropped because of margin calls covering. Do I agree? Yes, I do. That was, I mean, you know, we were talking about margin calls happening a couple weeks ago on almost everything. It was really just crazy. All right. Where's the Fed going to bring the money from? They're going to print it, Gagadeep. They're going to print it. That's what they're doing. They already said that it would not be on the burden of the taxpayer. When someone says that, the only thing they're doing is printing money. It's not going to be on the burden of the taxpayer. It's going to be on the burden of anybody that holds U.S. dollars. All right. Ganesh, I did not hear about the IMF green light and the yawn to the foreign exchange basket. I did not. I need to go back and dig around on that. In the money, why not out of the money? No reason. I mean, I'm a fan of options that actually have some real value, especially the ones that are at the end of the day, and especially ones that that are going to expire by the end of the day. Because the last thing I want, Bruno, is to have an option that's out of the money, the stock go in my favor, and the option doesn't go in the money. That's like just adding insult to injury. Yeah, trade what you see, not what you think. Ty, I'm not gonna take credit for that quote. All right, I don't. That was one of our long-term optionetics instructors that said that, and I thought that was one of the best things. I will give credit to this quote, and that was something that that I said: trading without a system. All right, is the example. Someone said, "Well, I want to trade what I think," and I said, "You know what? If you didn't do well buying stocks, when you were a stock trader, if you didn't have a strategy to buy and sell stocks and you lost money trading stocks, all options are going to do is allow you to lose money slower." That is a quote of mine. What's the best level of volatility for buying calls or puts? Well, you look at the chart, Javier, and the chart will tell you, the IV chart will tell you that. And I like to go back about 6 months. And with that, Jay, the floor is yours.
Let me scramble to the unmute button. Got it. There we are. I appreciate that. All right, folks, we will go through the drill of looking at, well, here we are on Monday. And so with Mondays, you can start out by doing the weekly money. If you have access to the complete trader level access, weekly money, this is for bullish setups on Monday. Bearish setups we look for on Tuesdays. Now, if you think that this market has some more up strength to go, you can entertain this on a Monday in this market environment. You already see Tom saying that if when it breaks to that specific level, 260.80, he's going to initiate a put trade, anticipating lower prices in the market. So if that says, well, if he's looking to go bearish when that happens, why am I going to look at bullish? If that's the question, and you have that kind of doubt, it's best not to even go look for the bullish opportunity with the weekly money. But if you wanted to entertain it anyhow, you would just click on search, and I'll do that now and show you that there are no opportunities there anyhow. So it's a moot point. We don't have to worry about the weekly money. Tomorrow you can switch it to Tuesday and do bearish, best, or good, and then run the search. But again, you save that and wait until tomorrow. So let's get into Darknet. And when you have Darknet up, you can change it to call option trades like I do, and then go ahead on the all Darknet stocks, click search, and see if anything has come up. And again, I like to trade the B bullish signals versus the reiterated bullish R or the aggressives, the A's. But there's an aggressive on TBT. So if TLT is the inverse of equities typically, and when equities go higher, bonds tend to go lower and vice versa. However, we're in a market now where oftentimes they correlate. That gets kind of confusing. But here we have the TBT, which is the opposite of TLT. So if TLTs are expected lower, TBT would be expected higher. You can click on the ticker symbol, bring up the chart, and you'll see that the A has kicked in. Now, oftentimes, if you took the B bullish signal, you would have either stopped out, or on an R, you could have cost averaged in, and then on an A, an aggressive, you can cost average in a third time. That gets to be pretty trying for me. I don't like to do that. And typically, I'm not a fan of trading the A aggressives if I pretty much only favor the B bullish signals as it is. But nonetheless, that's there. There's your Darknet signal. It's an aggressive signal on TBT. Let's go ahead and click refresh and bring up just that list again. And then you have the EWW, iShares, SCI, the Mexico ETF. And the thing that I wanted to look at with EWW is I also saw it on the money calendar. So this is going to happen to you guys a lot of the time. So if we go to money calendar and we're on today's date for both darknet in one tab, money calendar in the other tab, if you were to go through and look, and all I did is I clicked on the symbol and alphabetized it, I saw that EWW was in here as well. But what's the concern? I have conflicting signals. I have a darknet bullish signal. R is a reiterated bullish. Remember, darknet is primarily and only a bullish scan. So whether it be a B, an R, or an A, it's all a bullish signal in some variation. B is the first bullish signal. R is a reiterated bullish that there might be an opportunity to cost average in. And then A is a really aggressive if you want to go at it a third time. But so I have an EWW bullish signal here. On money calendar, I have an EWW bearish signal here. So when we get conflicting signals, it's best to just move on. So I thought when I saw EWW here, oh, cool, a 1-inch cut. Nope. This is a bearish money calendar pattern that's happened 9 of the last 10 years at the same time that darknet shows a bullish. And I don't want to rationalize saying, well, darknet's a shorter term, it could be a quick bounce, and then it rolls over. No, don't get into all that kind of dialogue in your head. You got a bullish on one, bearish on the other, pass. Go find another opportunity that doesn't have those conflicting signals, and then you won't have to mess around mentally in your head with do you or don't you. So there's a TBT. A couple of others have come in here, but what's the thing over here on the slippage? We like 1% slippage or less, and everything is higher than a 1% slippage. So that automatically says next on all of these, okay? So let's just move on from there. We may find opportunities in our money calendar search. So let's click over into money calendar. And again, for the new folks getting in here, when you're here and you log in, those that have the access to money calendar can access it right here by clicking the money calendar icon. You can click home, go to Tom's tools. If you're anywhere else in the tools, get back to this page, click on the money calendar and go to work. So we're on April 6th. Let's go ahead and click on April 6th and look at the candidates. We want to double left click the power meter, ranking them by the highest positive power meter to the lowest. And the first one on the list is a 100%er on BKNG. But past experience with this stock, this is the artist formerly known as Priceline.com. This is Booking Holdings. Folks, this thing has ungodly wide bid-ask spreads on their option premiums in a normal market environment. You can only imagine how wide this slippage and the difference between the bid-ask spreads are going to be on Booking in this kind of marketplace where the volatility is all over and extremely high. So we're not going to even bother with looking at Booking. We're going to just pass on that. It's not going to be worth our time. The one I wanted to look at was another one that had a 100%er, and that's on Marriott International. Now you can know that Marriott's been getting beat up. It's one of the hotel stocks, and in this market environment, you know that with the coronavirus pandemic, and especially now with all of us on lockdowns and stay-at-homes, there's less and less people frequenting air travel, casinos, and hotels. So let's take a look at something. I'm going to go to another tab, go to Stocks, Charts, and Stock Charts, and we're going to type in MAR and click Update. Thompson's just backing up what I already said. It's very expensive stock and the options are costly. Agreed, Thompson. Agreed wholeheartedly there. Okay, so let's go into Marriott. And I'm going to reduce the number of trading days that we're looking at in the chart. It's set for trading days 120. You can adjust that to whatever you like. I'll just go 90 and click Update. And that zooms in the chart a little bit more. Now, what happened? We formed a pivot low around 60. The first week or two of March. It bounced as the rest of the market did and has since rolled over and is forming another pivot point right here at what price? $60. Are we on the precipice? Are we potentially forming a double bottom right now? Yes or yes? Yeah, that's a potential double bottom right there. So if we were to entertain this money calendar bullish price pattern that's gone higher, how many times? Let's go and take a look. Marriott, where are you? There you are. 10 of the past 10 years, Marriott has traded higher in price over this specific period of days. Now, its highest profit move was 3 years back. It has drifted off the last two, but are we seeing a 100%, 10 out of 10, in which the price has went higher over the specific period of days? Yes. So if you want to hang your hat on that and anticipate another move higher, even in this market environment, are we at a deemed lower risk point if we were to initiate a bullish trade here versus that previous pivot high where it bounced off the low the first time? If you say yes, and if you agree this is a low risk environment, meaning you can use a technical stop for Marriott, meaning if it closes below this $60 price range, or you initiate a bullish trade and it gets down there and hits a 50% stop, that's your stop loss point. That's your trade management. Then you would entertain this trade. And we'll talk about what trade here in just a moment. Is it a lot less risky to enter a bullish opportunity here on this double bottom support than that previous pivot high? When it was bouncing, if you were chasing momentum, I would like to think so. If you think so as well, you can do that. And there's the blow off low right there. That's when the most selling took place on this at that low. It gapped higher on depreciating volume, which means there wasn't as much conviction for that. And all along this downdraft, there's your volume. And now we got a day of some bullish volume coming in. It's not as high as the previous few days, but we have a bullish volume bar. I think Carla was asking about that, and there's a volume analysis. But folks, I did more than I needed to on Money Calendar because Money Calendar is not based off technicals. Money Calendar is a price and time at pattern. It's the amount of time, it's the number of times over the past 10 years it's traded higher over a specific date range. It has nothing to do with moving average crossovers, Bollinger Bands, gaps and volume, all that kind of stuff, all right? So if you want to start adding an ADX chart, you want to start looking at volume, you can do that. Just know that you risk talking yourself out of a trade based off the Money Calendar patterns because you brought in additional technicals. You can bring in extra technicals, talk yourself out of a trade, the trade goes lower and you're glad you did. You could look at technicals and say it doesn't look pretty, but the Money Calendar still calls for it higher, talk yourself out of the trade, and it actually works. So it could go both ways. I'll leave it up to you. It's not a technical analysis scan. It's based on price over time. That's what we use. We don't want to muddy it up with too many extra or any extra technical analysis stuff. I did that with the double bottom, but even that wasn't necessary if you just purely trade the Money Calendar pattern, okay? But there's a little bit of a price support there going along with the Money Calendar, which calls for it higher. And if you like that higher, let's entertain a trade, shall we? So what I've done, instead of going to options in the options chain and start picking out different strikes, I went into another feature of the tools, which is trades, edit, create, trade, trades, edit, create, and then create trade. And you get to the create trade page. Now there's some information we need to take down on the Money Calendar for Marriott if we want to move forward, correct? Before we go into the options analysis, we need to put down on paper our Money Calendar data and info. So what is the end date for Marriott? The end date is May 7th, okay? Let's check earnings and make sure that there is no earnings that's going to mess with this opportunity prior to that end date. So MAR for earnings.com, Marriott International, and we have a May 27th earnings. So the end date is going to happen before earnings. So earnings is not something that we need to contend with. Okay, so that's in the clear. So we have a May 27th earnings. We have a May 7th end date. What's the price of Marriott right now? Anybody have the price for Marriott? Let me go over here and take a look. Marriott, 69.63. So let's write down 69.63. And to assess a price target, what's the average trade or the average profit move over these past 10 years? $3.60, okay? So if I take the current price, add 360, which is if Marriott just moves its average profit, it should be a target of 72.90, or I'm sorry, 73.33, 23, okay? 69.63 plus 360, 73.23 is the potential target, PT price target, okay? And so if we have a May 7th end date, what's the expiration that we would choose? Now, typically, I'm not opposed to looking at a May 8th because it's the expiration just past the end date. But again, with a funky market, it's probably best to find the most liquidity. And the most liquidity, as Tom has taught me, and it's teaching all of you, the third Friday of the month's expiration is the natural expiration and where the most liquidity lies. So let's give us an advantage in that regard by looking at an expiration for May 15th. So any option trade that we're looking at or entertaining, we're going to use the May 15th expiration there, okay? And we'll entertain a call debit spread. So we want to buy the lower strike, sell the higher strike, and we're just going to do it for these case studies over the sample of one contract. You can do as many as you want, and according to your risk management profile, if you have an X percentage of your portfolio, which equals a dollar amount that you want to risk per trade, meaning no more than 500 or 5,000 per trade, you know, do the analysis over one contract, and then you can determine how many contracts you can do of that trade that does not exceed your max risk per trade. So here we are, May 15th, buying the lower, selling the higher for a call debit spread. Let's also change that expiration to May 15th. So we're going to buy a May 15th, and we're going to go a $60 call and sell the higher, this, I'm sorry, 65, and do a 70. So it's a 5-point wide spread. Now I'm choosing 70 because in order for max profitability to be realized on a call debit spread, you want the stock to be trading above the sold strike at expiration. So there weren't any 71s, 72s, or 73s. They're $5 increments here on Marriott. So I went with a 70. And if our target is 73.23 is the prospect, and it reaches that, then Marriott is doing what we need it to do, and that is trading higher than the sold strike of this spread. So now we have a 65.70, and you can play around with this. You can go a 60.70 or do other different width of spreads. But let's just start with a 5-point wide spread and see what we look like. 65.70, click on risk graph. And now we're looking at a situation where if we do nothing with the pricing, and this is the pricing as of 15 minutes ago, so you can probably get current pricing and see it differently. But right now, we're looking at a 78% return. If we take 280 risk, we stand to make 220. That's the max profitability of 78% return. And what has to happen? What has to happen is Marriott needs to be up above $70 at expiration and hold that level. And then anywhere in between now and see, expiration is this black line. And if you have the hover feature on where you can put your cursor on the line, you'll get the profit in stock, meaning the profitability for the trade on a per contract basis with the stock at a specific price. So anything above 70, that's our max profitability. Our end date is May 7th, so we may not have to, well, we encourage you to not hold the trade past the end date because the data doesn't show what to expect on any days past May 7th. This is shown, the data is calculated at a 360 average price move over these periods of days with that end date being May 7th. So you can look at a previous interval at that price level and say, okay, let's say it gets up to 73. There's 74.40, that's close. So we're looking at about a $72 profitability. So you may not make max profitability, but you will make some profit so long as Marriott bounces higher, okay? So if you like that prospect, that's the one that you can entertain. What's something else that we can entertain? Yes, Marriott has already had a price move today. We checked the current price of Marriott. The current price at the time was $69.63. We added the average price to that and got a 73 price target. Now, if you're asking that question or pointing that out, that it's already made a 10-point move today, meaning are we not expecting that move anymore? I mean, this is based on opening price to closing price. If that's the case, then you want to wait until tomorrow to see what tomorrow's average price move is. If Marriott's still on the list for bullish trade, and then do this process, go for it. But we're in intraday, so I'm taking this educational tack, showing you what you would do at the end of market or before market opens the next day. That's a valid point. It said that Marriott could move this 360 from the open of today higher and over these 8 ranges. It's already done that 360. It's exceeded that average price move today 3 times almost. So the same thing, you can wait until tomorrow and go into April 7th and see if Marriott is there and start over with this process like I just showed you today to see if you want to go after a Marriott trade tomorrow with whatever the price is for the morning, add 337 to that to assess a new price target and move on. Okay. Marriott's earnings is 32 days. That is correct. And we checked the earnings and we also confirmed that the end date is prior to the earnings date. So this move will happen prior to the earnings, Thompson. Appreciate you pointing that out, but we already covered that, sir. Thank you for that. And that's not something to be concerned with even tomorrow. The end date is May 7th, still with an earnings of May 27th. So that's clear, nothing to be worried about in regards to earnings. Okay. Here's one other thing you can look at. Let's go to risk graph. Let's go to trades, edit, create trade, and create trade one more time. Let's look at a butterfly. So let's go where we will, oh, not 70 contracts. Let's do the expiration again for May 15th. And this is just, again, doing your analysis with the tools. If there's one trade like a call debit spread, what does a butterfly look like? So we're going to sell 2 of the middle strike, and we'll make that 70. Again, there's not a 71, 72, or 73 strike. So you can either go to a 75 or a 70 and make that your target middle strike price that you would sell 2 of, and then buy 1 wing just below and just above, or 2 below and 2 above. Let's widen it out from a 5-point. Let's go a 10-point wide butterfly. Not that we're going to do this, but we're going to entertain this by using the tools to risk graph things out and see what it looks like. So I did it again. I need to edit this because it has a put up there in the first column, and we need a call. So we're selling 2 of the 70 May 15th calls, buying 1 May 15th 80 call, buying a May 15th $60 call, and let's look at the risk graph on that. The cost on this is less than the cost of the call debit spread. So already a butterfly looks favorable, and that is a $150 cost. And what has to happen? It needs to stay in this black butterfly net. Let me do something. I'm going to zoom in on the risk graph and take the highest or the upper price that's 155 currently. I'm going to make it down to about 105, 110, just so we can zoom in on things and look at this a little bit crisper, because that butterfly net didn't look too wide. It didn't look, so there, we zoomed in and it widens things out in the view. So now we're just saying, look, here's our break evens. As long as Marriott stays below this 78, 80 area and above this 60, 150, 62 area, as long as it stays between these 2 break evens, we've got a shot at some profitability here as we get closer to expiration. And then here's the different intervals. So, I mean, right now, not much of a profit. Okay. And as you go a quarter of the way through, 3/4 of the way through, and then up until expiration, as long as it stays within there, you've got some profitability there. Now there's a max profitability of 566%. Now remember, we're not going to hold this until expiration, not till May 15th. But as long as it stays within this cone, if you will, this butterfly net, if you will, there is some profit potential sitting there for you. All right. Some of you guys said don't forget to make that third leg of call. You're correct. I caught that. I changed that. We've got all three legs of call. So there you are, folks. You've got a call debit spread opportunity. You've got a butterfly opportunity. The expectation is Marriott higher, as it's done 10 of the past 10 years. If you want to wait until the close of market tonight or before market's open tomorrow to assess a new price target with that profit move expectation added to it, and then go build your trades, you're more than welcome to do so. And now you have the record. You will have the recording. You have the steps in place as to how go to build either one of those and make the assessment for that. All right. You guys want to look for a bearish opportunity in money calendar. We talked about Clorox last week, and Clorox is actually bouncing higher versus going lower. So let's not entertain that one again. Let's go power meter, and I want to go back to April 6th today. Power meter, double left click on it. UNH, a little bit too short. Clorox, we already did last week. Let's entertain. I was going to look at KSS, Kohl's for everybody, and it's looking for a 3-point move lower. Let's update Kohl's. It's at what price? 14, 3 points lower is 11. I mean, can it go further lower than the 14? If you think it's already made the majority of its move, this little bounce has got you a little spooked, you don't want to do KSS, I would understand that. At the same time, you know, if I'm looking at a 3-point move lower, I think that's what KSS showed us here. Yeah, close to that, 269. There's an opportunity there. We can also look at one like on CTSH. So let's bring in CTSH. Update. This is a higher price stock. It's 45 to 40, is 47.80 or whatever the current price is now. Somebody can type that in for me. So if this thing's going to move, how many points down? Not that it will for sure, but the 10-year back test shows 9 of the past 10 years, it's made an average drop of $3.34. So I could see, I took the stock chart page off. So let's go stocks, charts, stock charts. I can see this making a 3-point drop better than a KSS. Let me bring in CTSH. And CTSH, if you guys want to know what that is, that's Cognizant Technology Solutions Corp. So CTSH, now again, it, like everything else in the market mostly, except for oil, is bouncing today. If you don't think it's going to hold this bounce and roll over, like the rest of the market, we'll be looking to roll over. And you have CTSH on the bearish scan for money calendar. Let's entertain a bearish trade, okay? So let's write down the ticker symbol, CTSH. Carla was kind enough to type in the current price for us, and she has that at, actually it was Kathy. Kathy says right now 47.98. So basically 48. And then what's the average drop on CTSH? 334. Subtract that from 47.98, and we're looking at a 44.64 target to the downside. Okay, what's the end date? The end date for CTSH is May 5th. So let's go ahead and look at a May 15th option. And anything else that we need. Earnings. Let's not disregard earnings, folks. So CTSH, we have an end date of May 5th. May 6th. So end date is going to happen the day before earnings are announced. Woo! We made it. You know, so May 6th, close of market. So May 5th, we're out. Whatever happens on May 6th with earnings, we're out. We don't have to worry about. All right. So let's go into the trades, edit, create, and create a trade. And so we'll change the actions for CTSH from Marriott and click change. And let's just start off with a basic put. May 15th, buy one. And let's look at and see if there's a $48 put out there. Risk graph. Neither will or won't get some information. It says none, so we don't want to mess with that. Let's go edit. And let's look at a little bit more in the money. Let's look at a $50 put and see what we're looking at. There is a 390 by 430. Now, Martine brings up the point. It says earnings are 430 after market close, and we saw earnings whispers May 6th. So as Mike's taught in his earnings mastery course, always confirm with the company. Go to their website, investor relations, or call the company and find that out. Confirm. If you confirm that earnings is prior to the end date, stand aside. If earnings is after the end date, then this is one that we wouldn't have to worry about. But thanks for looking that up for us, Martine. And you didn't have to really look it up. The tools here says that, okay? So when you have conflicting information like that, go to the website, go to the company themselves and find out for sure. So to complete going through the educational process of setting up a put option trade or a bearish put trade, this is what we've done. This is how you would do it. You just go out and you build the trade, run expectations. Marriott is up 1132 now, Carrie says. Thank you, Carrie, for the update on that. All right, guys. So there you are. I'm not going to belabor this too much longer. CTSH is a bearish money calendar candidate. You've got a target price to the downside. You go ahead and create your bearish trade, but only after you confirm if it's something to bother with. If it's before, if the end date is before earnings, you're safe from that scenario. If the end date is after earnings, which means earnings is going to be reported before this stock needs its run, its end date run, then you stay away, okay? So there's maybe a homework assignment for everybody. If you want to entertain CTSH, go find the earnings specifically, and that determines if you go forward with doing any more analysis of setting up an option trade or not. There you have it, Tom. That's all I got, unless you have anything else more you want to send my way.
No, I think that was great, Jay.
Okay, thank you.
I'm going to finish up the webinar talking about gold and my long-term aspirations for this. So as I said earlier, I think that gold has an opportunity here to make a big run in a big way, regardless of what the stock market does, because one thing that I believe is certain is more and more money is going to get pumped into the system, and that's just going to make tangibles, arbitrarily make tangibles more valuable. And that's already kind of starting to happen with GLD. So I need to own GLD. I need to actually own the stock. All right. And so what I've looked at is I looked at this chart. I like where it is. I like the idea of where it's going. I think GLD could be $190 to $200 by the end of the year, which is that's a large move. But I mean, if you take a look at the distance between where we were in that 30-point move that we had that happened within a week span, and you add that to 160, we're already at 190. The 190 is there, and so I'm looking at 190, 200 round number. And so what do? I could buy GLD right where it is, but this is an area where I'm not. It's one of those not the rule but the exception. The rule is that I'm not a big fan of selling put options without covering somehow. This is an exception, and I'm looking at, for instance, do I want to go all the way out and sell the Jan 15s, or could I sell the ones that are expiring on Thursday? And what are we talking about between price? So let's just do a quick update and let's look and see what we're working with here. The at the monies are the 155s. Well, those puts right now, 155 actually, 155 puts trading around 196 as of the last print. And that's for the ones that expire in 4 days. The ones that expire in 294 days, 155 puts are $13.93. Well, I'm in a position of wanting to own this sooner rather than later. And so by selling the put options, the 155s, I take in a couple dollars. I have 4 days for that to happen. If it doesn't happen, if I do not get assigned that stock, I'll sell next week's. And I'm going to try to sell weekly on this until I start getting some assignment. I start getting some gold and start putting it in the coffers of the long-term portfolio, so to speak. So that's one way that you can do it. From here, I just simply go to I've already gotten filled on my first batch, but GLD, well, where are the puts at right now? And you can see that the 155s are trading at 177 by 178. So the puts have dropped a little in value, and that's only because the price of gold has actually gone up in value. If we take a look, and let me get, oh, by the way, look what SPY did. For those who asked the question, why not sell it here when it was at 261, below 262? Because it could go higher, and that's exactly what happened. And now we're at 262.46. Maybe it might drop out from here after 2 o'clock, but we'll have to wait and see. This is going to be a wait and see kind of moment. All right. So there you go. That's that's SPY, but I want to look at GLD. And here's GLD, and this is what's happened. Now, Jay, you took over about a half an hour ago, and GLD had come up, it pulled back very close to the high, and it's just been accelerating off that high, which happened about 130-ish. So as you can see, we've had a nice little move up, and I'm filled on this, and if we have to be below 155 if I'm going to actually get this GLD. If not, then come Monday, I'm going to try again. And my goal is to get several thousand shares of GLD in my portfolio, and my plan is to hold those for the year. All right. That's just an idea. And you know what? There's some stocks that are going to be exhibiting some really good put premiums. All right. For ones that you want to hold. I do think that, when you look at the airlines, for instance, I'm looking at United Airlines. I do think of all the three, I think Delta Airlines is probably the strongest of them. But I mean, if you take a look, DAL, I'm short. I'm short DAL right now. It's down 20 cents on the day. But I mean, look at this move. This is the 26th of March. We were down here at $19.10, and it popped up back up to 35. And now we're back down to 22. This thing is all over the place. It might be a great one to own down the road, but right now I don't want to own this. I want to sell this because earnings are coming up in a couple of days, and I think that the company is going to let us know real quickly how bad things are. And then after that, maybe I might want to own some because the government might be coming to the rescue. Because I think Delta Airlines is one of those too big to fail kind of companies. We know Boeing is. That's already, let's look at Boeing. So BA, you can see here what has happened with Boeing. Boeing was a $391 stock late last year. It fell from about 350. This was in the middle of February, down to 89. Since then, it rallied back up to around 185. It came back down. The low on Thursday was 120, and now it's 140. I mean, this thing, it bailed out or not, it's not going to be making moves back up here into the 2s and 3s. It's going to be chopping around down here until we get out of coronavirus and they start getting orders again, and they get 737 MAX off the ground. So that's why I think we're going to be in this for a while when you look at some of these underlying stocks. And that's, to me, what makes gold so such a nice looking vehicle. Okay, so that's pretty much it, guys. So I want to thank you for joining us again today. And of course, we'll finish off on our mantra, which is basically spotting rules-based opportunities, whether those are technical, seasonal, or volatility-based, creating low risk or high probability trades, and then of course, planning, executing, and managing those from start to finish. All right, I'll have a recording out to you within the next couple of hours. And like I said earlier, we're gonna bump this up soon to be doing dailies. All right, I was gonna wait until about mid-April before I do so. Mid-April's coming up fast, so pretty soon you'll see me tacking on these, and we'll be doing these on Mondays, Tuesdays, and Wednesdays every week for the back half of April. So just be patient with me. Got a couple things I got to get out of the way, and then we'll be right back in the thick of it, guys. So thanks again. Have a great rest of your week. Happy Easter to everyone. I would say enjoy that 3-day holiday, but you know, a lot of us have been on holiday for quite some time, and honestly, if you're like me, you can't wait until this long-term holiday ends. So anyway, stay safe, everybody, and we'll talk to you soon. Bye now.